Ah, hallelujah. Hallelujah. Mm, hallelujah. No problem. Thank you so much. Thank you so much, whoever prompted me to unmute myself. Wow. So thank you so much for joining all the webinar that we've held for 4 solid weeks. And today is the climaxing of it. So we're going to talk about a very strong long-term financial tool. I know some of you might have heard about it, but if it is well structured, I repeat, if it is well structured by a J-1 teacher who has been in that position, who have seen people benefit from it, that is one of the most powerful tools amongst all the other ones we talked about since the last 3 weeks. So, in a summary, I'm going to mention all the things we've done. If you just join in, we are talking about what we talked. all over the 3 weeks that we've met. We've talked about high yield savings account. We've talked about, I mentioned a little bit about CD, that is certificate of deposit. We also talked about investing through a brokerage account, specifically investing in stocks and ETFs. And please remind me, in the last session of today, I'll give you a bonus tip how you can invest in a certain company in Ghana. I just bought mine. I know most of you know Casaprecon. So Casaprecon is a very big company or beverage company back home in Ghana. And lately, they just announced that they are soliciting for funds. They are now IPO on the Ghana stock market. So I'll talk about that and I'll show you where you can get the stocks to buy. So right now, the least stocks you can buy in Casapreco shares is 2,400, and 2,400 is like $200 over here, or $210. If you buy these stocks, I promise you, I know investment is risky, but this investment is worth it. 2021, when MTN decided to come out and seek for funds, I was able to buy just 400 Ghana cedis. At that time, I didn't have money. Just 400 Ghana cedis. I checked my Ghana number and I checked my statements, okay, of how my shares in MTN is faring, and that was crazy. I was able to get like 2,700. Something I paid just $400, sorry, 400 cedis for is now worth 2,700. So that would be the bonus thing that we'll talk about today. If you don't know how to invest in the Ghana Stock Exchange, I will show you. We will just use small time to do that. All right. So, in summary, again, we've talked about high yield savings account. If you didn't join in on the first day, we've also talked about CD. We've talked about stocks and ETF. We've talked about stocks and ETF, and we're talking about stocks and ETF, that is opening a brokerage account. So if this is your first time hearing all these things, I'll keep on explaining things and they will also pop up in our presentation for today. So let's get started. But before that, let me introduce myself. My name is Yao Abri and I am a Ghanaian teacher just like you. I was fortunate to be licensed as a financial professional and I didn't stay within the comfort of my jurisdiction as a financial professional. So as a teacher on J-1 program, I decided with my team, I have other teachers who are also on the same path. We decided to come out with 7 financial tools in the US that teachers can use to maximize or benefit themselves in terms of finances. So we use the J1 teacher as a target customer and we outline certain financial portfolios that would really help you when you get here on day one. So from day 0 to 12 months, there is a financial tool that you can use. From 12 months upwards, there is a financial tool you can use, and the other one. So the main purpose of this webinar that we held for 4 days in 4 weeks was to help any J1 teacher because at the moment we know that waiver is behind the doors. All right, it's not so much assured for the next 4 years or for the next 3 years. We don't know what is going to happen. If there is going to be an ease on a waiver issuance, we really don't know. So in this time, you have to be very, very strategic. And what one of the strategies is preparing yourself financially. So now our monies are working for us. If you are saving, you are not saving in a traditional account or a traditional savings account, your money is really working hard. People are receiving interest, compound interest all the time. $50, $20, and you'll be surprised. By 12 months, you see how much your money, your small money that you saved in your savings account really worked hard for you. And uh, other thing is, we also taught about a J1 teacher. You are staying here for 3 years, averagely. I know some were very unfortunate. This week, I was on the phone with a certain lady in which state was that? Is it Missouri or uh, Alaska? One of these states. And she called me up because the principal is not extending her into the second year. So all these are realities over there. I know so much stories. I know so much story. I know a teacher who who was a very good friend of mine, went home with a very critical illness. I'm talking about stroke. All right. So a whole lot of things are happening. So if you plan yourself strategically and financially, you don't even care about whether the waiver is issued or not. Your retirement can be secured over here. Your investment will be well planted. And by the time you are back home in your country for that 2 years, you'll be really, really enjoying yourself. All right, so that is it. The name is your outbreak. So let's begin. So let me share my screen quickly and we commence with today's session. All right. I believe everybody can see my screen. And before that, if you have any question on the past 3 days, please ask right now before we move into today's session. If you have any question, I'm giving just 5 minutes. 5 minutes. If you have any question concerning high yield savings account, how you should open it, and I'm pretty sure by now everyone on this live has a high yield savings account. Everyone on this live has a brokerage account. So questions on high yield savings account, questions on brokerage account, please drop in the chat section. And if you have any add up, if you have any add up before we begin, you can also drop it. Just let me do it 2 minutes. So just 2 minutes. If you have anything to ask or to say about the two strong financial portfolios that we talked about, remember they were all taxable financial portfolios. You've been taxed for the capital gains. At this point, I know everyone on this live understand what a capital gains is, understand what paying taxes on capital gains is. So if you have any question, any add up, any suggestion, you can bring it on board before we commence on today's thing. I know some of us have a preview of this, but I'm going to show you the best and the secret in this so that you can use it to spice your financial decisions in this country. So if there is none, I haven't seen any question, I haven't seen any hand up. If there's nothing like that, let's start with today's session. So we are going to learn how we can use insurance, okay, as a financial tool. Insurance as a financial tool. Remember, insurance is different from investment. Insurance. Okay, can you please review the list of stocks to purchase? A list of a list will do for me. Okay, all right. So I'll do that later in the program. List of stocks. All right. So the last time we talked about ETF, I'll just go back small. We talked about ETF. So for beginners, buy ETFs for the start. It is low risk so that you'll be safe for now. So I'll mention some ETFs in the comment section or in the chat section so that you do it. If you know any example, one is VOO, Vanguard, and another one is VTI. That is also from Vanguard. That tracks the entire US stock market. Another one is VXUS, which tracks so many companies outside the US. So these are the basic three that you can go on to now and purchase them. Yes. Okay, someone said VTI, VOM. It's VXUS. VXUS. David, please fix it for me. VX, X accent this. VXUS. And you can also buy QQM. QQM is also tracking the big technology companies in this country. NVIDIA, uh, all the semiconductors, a whole lot of technology companies. So if you're interested in AI, that is where you should channel your investment. So these are the simple ETFs that you can, go into. VTI, VOO, VXUX, VXUS, and QQM. And some of these, if you want dividends, if you want your investment to be paying dividends to you on a quarterly basis, you can also look at SCHD. That is from Charles Schwab, dividend ETF. SCHD. So they also combine big companies, about 100 companies that pay dividends to its investors. So SCHD. There is another one that also pay dividend. It's known as JEPI. It is from JP Morgan. So you can add it to it. David, please add it for me. JEPI. JEPI. All right. So let's begin. So as I said, insurance is not an investment. This point should be made clear. Insurance is not a retirement account. So mark these two things down. It is not a retirement account. It is not investment account. All right. Any agent who mentions this on any public platform can be sued for it, because any person who wants to use insurance as a financial tool needs to understand the whole thing before they can engage themselves into it. So it is not a retirement account, neither it is an investment account. Take note, please. Now, so we're going to look at this. So in the whole thing, now a certain question that many people are not talking about is, I'm pretty sure if you have taught in Ghana before, or you were teaching in Ghana before flying over to this place, you were paying social security. Even if you were teaching a private school, you were paying for social security. For the 3 years you've been here, for the 5 years you've been here, there has been a halt. You are not paying your social security. So if anything should happen to you, God forbid, I know Ghanaians, we are afraid of death, but if you want to go to heaven, if you want to go to anywhere, at least death is the only visa. So if your social security hasn't been paid for 3 years, 4 years, 5 years, there is a lapse in it. The last time I checked it was like 30,000, and 30,000 like $3,000. You've worked in the US. $3,000 can't take care of you in your pension days. That is 300 million old money. It cannot take care of you. So since you came to the US, your pension has been disrupted. Have you thought about that before? You should be thinking about that. The next thing is, if you are in this country, okay, whether you're on H-1B or you are on a J-1 visa or even a green card, if you want to benefit from the social security in this country, you would have worked for at least 10 years. I mean, 10 solid years, 10 years before you can benefit from the social security tax you've been paying. Again, if you're in second year, look on your pay stub. There is something called FICA. I know some of you are crying about it all the time. So FICA is a social security tax that you pay all the time, starting from second year. And the first day I saw my pay stub and these men were going off it, I was really crying. So upon paying all these things, and after 3 years, after 5 years, you don't get the waiver. You went home, you couldn't come back. They took your money for free. You didn't get any benefits from it. So we've mentioned two problems that many J1 teachers are not talking about. Your pension is disrupted. The money you are paying into the US government, you are not getting it back because you haven't worked for 10 years. If it is not 10 years, they use your work, or they evaluate your work in points. It has to be 40 points at least in order for you to benefit from the social security benefit when you grow like 59 and a half upwards. These two things, we don't have it. And again, we are here for only 3 years. I'll always use the average years, which is 3 years. If you are lucky, you go to the fifth year. Time is running out. Time is running out. So right now, everything you do is a very vital decision you take. That's why we started this 4 days webinar class. The last one is, most retirement accounts don't follow you. So let's say you get H-1B, or you are on H-1B right now. All right. And you've been signed for, or you've been sponsored for 3 years. The next renewal, if your school district does not renew, you are just like a J1 teacher. You need a new sponsor. If you don't get a sponsor, you would have to go out of status and you can go home. That's why you need to plan strategically. If you're on green card, yes, you have a permanent stay. You can do with any financial or any retirement account. There are several retirement accounts. We have 401k, we have Roth IRA, we have IRA, and other stuff. Even there is 529 account. 529 is for your child, college account. All these are there. But because we are here for a short stay, we are non-immigrants or non-immigrant visa holders, we do not benefit from these. So that is why you should factor in this last financial tool for your long term. Remember, we categorize our financial tools into three. Who remembers? We talked about short term financial tools, mid term, and long term. This is a long term. Insurance is a long term. All right, let's move on. So these are the four things no one is talking about, but it is eating us in the back, or it is stabbing us in the background. Now, we go again to our catalyst. In the three meetings, we mentioned three catalysts. We talked about consistency, diversification, and compound interest. These three catalysts still work in this scenario. But we're going to add another catalyst, which is P, protection. Upon all the sweat, upon all the hard work and the toil that we went through, some are driving Uber, some are doing that. You amass this all these monies, and you don't have protection. If I say protection, I'm talking about death benefit for your family members. I'm here with my wife. God forbid, if God decides, if I am no more today, my wife and my kids, whom I was toiling for, are covered because I have this long-term financial tool. They are covered. I'm asking you the same thing. If something like that should happen to you, I know for Africans, we are afraid of death. So, God forbid, if something like that should happen to you right now, what happens to your wife? If you are not married, what happens to your beneficiaries? What happens to your mom, your dad, those people back home whom you are always sending money to as remittances? Are you going to die for free? For me, I'm not going to die for free. When I die right now, my kids and my wife, should I say rich? Because the amount that I have in my life insurance can protect them a lot. They can buy a house with it. They can even stay, if they are not allowed to stay here, if they go back home, it's a huge money. They can call themselves millionaires. One other protection is in case there is a critical illness or chronic illness, are you protected? Most of us are driving Uber tireless. I know someone, the moment he closes from school, 4 o'clock, he hits onto the road, drive for 5 hours before he comes to sleep. And he's always saving the money. The saddest thing is his money is in normal savings account. Capre is not coming from it. He doesn't have a brokerage account. Nothing is working for him. The money is sitting there and it is devaluing. If you have been here for the past three days, we've talked that there is an average of 3% inflation rate. I'm pretty sure this year it might even go beyond the 3%. Every year, the cost of prices and goods and services go up at least 3%. Now see how gas is being sold at. Things are going up. So upon all the toil, upon everything, and you fall sick, how long can you survive? I know some of you have 50,000 saved. You are the only person who knows the money you have. You have 50,000, you have 20,000, you have 30,000 saved. Do you think if you are hospitalized right now, 30,000 is enough for your medication? Ask yourself. That is a very big question. Ask yourself right now. Is that amount enough to take care of you? Let's put that one aside. Wherever your money is, I don't know where your money is, but if something happens to that money, let's say you've been sending the money back home to open a business for you. You know how untrustworthy some of our friends back home are. You send the money back home to open a business, and you go back home, there's nothing. As I said, my position right now, I hear a lot of stories. A friend of mine sent almost $10,000 to a friend whom he trusted so much to start a poultry farm for him or on his behalf. He went home, the poultry farm is there, but in the account where he's supposed to be saving all the earnings from or all the cash flow from the business is empty. Till date, he hasn't been able to provide any funds in the account. So that is it. Protection. Is your money protected? Is your toil protected? Is your striving protected? Is your hard work protected? Is your health protected? So these are the four catalysts that is climaxing our webinar. C, D, C, and P. So C, D, C, P. Consistency. Are you saving consistently? Are you investing consistently? Are you funding your policy consistently? Diversification. Do you only have a savings account? That is wrong. Have a brokerage account. Do you have only a savings account in the brokerage account? I suggest insurance for you. These three things. So diversify. If you have stocks, what type of stocks are you buying? What type of ETFs are you buying? So this catalyst, write it on your wall. C, I'll be consistent. D, I'll diversify, have lots of multiple streams of income. Compound interest, anything I put my money in should yield on compound interest. Otherwise, no, no. Your regular savings account is a no, no. It's not building on compound interest. And protection is my life protected. If something happens to me, you will say that your sponsor's health insurance is secured. It will shock you. If something happens to you right now, the last time I checked, my the amount of insurance my sponsor pay for me is like $500. So if I should go to the hospital and something goes beyond $500, you can imagine what happens. So these are the catalysts. Let's move on. Now, so as I said, we are now going to look at how we can use insurance as a retirement account. Insurance is not a retirement account, but we're going to use it as a retirement account. But we need to understand what an insurance is. Insurance, in basic terms, is the transfer of risk. We have health insurance. If you get sick right now, you are pushing your risk onto a company. They will pay the money you're supposed to pay to your hospital or your medication. They are paying on your behalf. That is insurance. Basic term, transfer of risk onto a third party or onto a second party. So that is it. There are so many insurance. We have life insurance. Life insurance is you uh paying or amassing some money somewhere. So when you are no more, it can take care of your next generation. If you're a Christian, the Bible says a good man is a person who leaves many property for the generations unborn that is after him or her. So if you don't have anything saved up for your family members, your kids, your wife, your family, your mom, your dad, what kind of life are we living? So insurance, that is it. So we have life insurance. In life insurance, we have term life insurance. It is a pure protection. You can buy it for 10 years, 20 years, 30 years. If you buy it for 10 years, there is no cash value in it. So let's say I'm paying $15. They are always cheap. I'm paying $30, $20, $30 every month. I pay it to a company for 10 years. 10 years and God protects you. Inshallah, nothing happens to you. Like there's nothing they're going to give you after the 10 years. So you will decide either to continue with a new policy or whatever you want to do. That is it. They don't provide you any kind of protection when you are alive. That is the type of life insurance we used to hear back home. Me, back home in Ghana, if you come to tell me about life insurance, I will fight with you because it didn't make sense to me. That was being sold to us back home in Ghana. Pure protection, that is term life insurance. So that is it. It has limit. Term, it has limit. 10 years, 20 years, 30 years. You pay all this money. If you are protected by God, you have lost. It is very cheap as well. There's another one which falls under permanent life insurance. So basically, there are two: term life insurance and permanent life insurance. So there's another one which is known as whole life insurance. For whole life insurance, it covers you for life. So it is a permanent life insurance. You pay till you die. If there is something that stops you from paying, there are things and other conditions that may come into play. So we look at all these in this presentation. So it covers you for life and it builds a guaranteed cash value slowly. So any premiums you pay into the life insurance, that is permanent whole life insurance, it grows for you. It's not like term life insurance. All right. There's another type of permanent insurance, which is permanent life insurance, which is index universal life. I've explained what index is. Index is a collection, all right? So in this type of life insurance, it is flexible. We know for teachers, if you make something change, if you make it very strict, it cannot go in our favor. So we need something that is flexible. So it is flexible, and what they do is they all your premiums that you pay, it is linked to an index, which is S&P 500. Thank God. We've been talking about S&P 500. Who does not know what S&P 500 is? We explained this last week. Standard and Poor 500. One other thing is you have a certain kind of protection. A certain kind of protection. This type of protection is protection for the hard-earned money you put in there. Whole life insurance don't have that. This index universal life protects all your hard-earned money, though it's a premium that you paid. It is growing for you on compound interest, but there is a protection. If the market crashes, if the US stock market crashes, if the US economy crashes, your contributions are protected. That is the strongest point in there. And they have flexible premiums. Let's say you are earning 43,000 now. You change your school district. You go to a school district that pays you 50,000. You can contact your agent, and your agent can, make some adjustment for you. I want to add more to my premiums. I'm paying $1 a month. I want to add more. It is flexible. So these are the initial importance. I'll let you know the other importance. We also have health insurance, which we all know. We also have auto and renters insurance. That is it. But today, our main focus will be utilizing IUL for our own sake. You left home with no social security. If you go home right now, social security is gone because you're not going to get any job. There is no job back home for you right now. If you are lucky to find a teaching job in the public sector, praise the Lord. But some of us may not get it. And some of us are even tired of the classroom. We don't want to go there again. So that's what we're going to talk about. Using IUL as a retirement account after the program. If you are blessed with a green card and you stay here, you can still do it. If you move out from this country, you can still access money from it. You can still have the protection that we talked about. The next one is, now let's look at what IUL is and some of the features. So in basic classroom terms, okay, it's like the school savings analogy. So imagine a school savings, right? A savings plan that pays you if you die. So we have about 20 students or 20 teachers. We are all pulling monies together. So when you pass or someone passes, they pay to your family members, and it pays your medical bills if you get critically ill. So whilst you are in the school, if something bad happens, like you got an accident, you are immobilized, you cannot go to work, you are stuck in bed. That savings that collection that we are doing will pay for your medications, and your contributions also grow because it will be linked to a certain index in the stock market. So it is not static. That $500 or $200 you are paying every month is not static. It grows. It grows all the time, and it also has a protection. If anything happens, your money is protected. So protection is very key. It's now part of the catalyst. CDCP. Very good. That's an IUL. So IUL basically it has a death benefit. What is death benefit? Death benefit is any lump sum or any amount of money. When you pass on, it is given to your beneficiaries. At the moment, my wife and my kids are my beneficiaries. If my mom is watching this, mom, please forgive me. So my wife and my kids are my beneficiaries. If anything should happen to me right now, they are the sole earners of my life insurance. And that money that the company will pay to them is known as death benefit. So take note, write it somewhere. Cash value. So cash value is any premium I have been paying into my life insurance policy, all right, is linked to the S&P 500 or the stock market. So it is not static. The company is using it to work somewhere. So you are getting compound interest on it. It is growing. So that is cash value. So if you hear me saying cash value, that is it. And this cash value that you benefit from IUL has a floor protection of 0.75. So protection is, as I said, if or when the stock market goes down or the US stock market crashes, your contributions and your cash value is protected. You are not affected by it. Do we get it, guys? All right, the next thing is index crediting. Index crediting. So because your money is linked to the stock market or linked to an indices, you have that protection. When the stock market goes up, they will give you something we call cap upside or cap growth. So if the stock market is growing like 20%, the insurance company will get you something very close to that. And in addition to that, they'll give you protection for your money if the stock market crashes. If everybody is crying about the stock market, your contributions are protected. That is the 0.75 floor. So if you hear me saying floor, if you hear me saying cap, it means the insurance company has a cap on your growth and they'll give you a protection. So you are in here, a cap and a protection. You don't lose your money. That is it. The last one is tax-free income. So any money that I earn, okay, is paid to my beneficiaries tax-free. That is one. All these that I'm talking about is the law. There is a law in the IRS code. You can Google it right now. IRS code 7702. So IRS code can let you access money from your this code can let you access money from your insurance policy as loans whilst you are living. Metiasi, as I'm living, if I need money, I can go into my life insurance account and borrow money from it and use it for whatever thing I want. So if I leave it to stay there for 10 years and I leave this country, I have something I can call my retirement in USD. In US, not in cities. So Social Security back home, SNET is in Ghana cities, and you compare these two things. If the US economy should crash to any point and you have your retirement account in USD, you just do the comparison, brother. All right, so that is it. These are the major four components or four features of IUL. Take note of it. The next thing is let's take a deep dive into the IRS code 7702. I said it is a way that the IRS have provided a small loophole like that the rich or affluent people can take money, they can take money from their life insurance policy tax free. They don't pay taxes. Remember, we learned that there is something we call capital gains tax. I know everybody on this live here knows what the capital gains is or capital gains tax is. If you don't know, capital gains tax is any interest you make is considered as an income. So you have to pay taxes on it. So if you have high yield savings account, any interest you make there, you got to pay taxes on it. If you have a brokerage account, you have stocks, any interest you make, you've got to pay interest or you got to pay taxes on it. That is capital gains tax. Another example, let's say in a classroom, if my students, I'm an art teacher, my students make an artwork and I'm able to sell the artwork like $1,000. That $1,000, the IRS will look at that $1,000. So, hey, Asantini, $1,000. The IRS will look at the $1,000 and they will hit me with a tax of let's say 20% to 30%. That is capital gains because I am gaining capital, I'm gaining income. So that is it. So when it comes to IUL or life insurance, you can access money from it without paying taxes to the government. So that is it. So the definition of life insurance is IRS code section 7702 defines what qualifies as a life insurance contract for tax purposes. So if you have life insurance, you can get money from it without paying taxes. And two, you can also take your own money from your policy, use it for what you want without paying taxes to the government or without offending the government. So this is the law. I wouldn't say it's a loophole, it's a law. So the IRS has a certain threshold. I'll explain something we call MEC, a certain threshold. Let's say they have like $2,000 in your policy. If you pay beyond $2,000, you have to pay taxes to IRS. But if you stay within the $2,000, if you pump money below $2,000 and you earn from it, you don't have to pay taxes to IRS. So this is what the elite or the rich people are using to enrich themselves in this country. All the big people have it. All right, we look at it. So these are the things that you can define IUL and the IRS code 7702. All right. So let's look at how the cash value in IUL grows. So this is a chart. I'll show you another one over here. Let me quickly pull this one up. Where are you? This one over here. So I'm going to share this screen, this part over here. Okay. Give me just a minute. Let me show you this chart. Okay, good. All right, let me show it again. So this is how your cash value in IUO grows. Okay. I'll explain it very basic. Last week, we learned that stock market is variable. When you say something is variable, it goes up, and down, up and down. So this is a chart. We looked at this last week from 1997. Look at how any place you see the red check, or is it? Let me choose a pen, highlighter. Okay. So any place you see this red thing means the stock market went down. From 2000 to 2002 was a com crash. We talked about this last week. 2008, look at that. There was a very big crash, 2008, 43%. It went down. All these things are turn downs or bearish seasons for the stock market. So now let's look at that in detail. So two people were giving like 250,000, this amount over here. In 1997, they were both asked to put the money somewhere. This person put it in mutual funds for okay, because all these things are invested in the stock market directly. So in 1998, the stock market went up 26%, and the money that was 250,000 grew to 315, which was very excellent. 1999, look at that. 2000, look at that. So in 2000, it went down. So the money he had earned in 1999, which was 374, now started plummeting. It started coming down. So it came down to 328. So this is where I was talking to you about the protection that IUA gives to your money. So we look at the other side. So let's look at the other side. In that same 2000, look, the IUO company, whom the other partner or the other guy kept his 250,000, he was offered 0.75 during the times of the crash. So he had 0.75 and his money was still intact, even though he was offered the least floor, which is the 0.75. That's the protection I'm talking about. In 2002, the market went down again, minus 24. The money he had, that was earlier on, 250,000 is now 225 to Abokasusru. The money has gone down drastically. That is the danger of investing in stock market. All right, that's the danger of that. But the IUL company gave a floor of 0.75, and the person's money never went down. So you see how the protection is being used to maximize the cash plummeting. So two people, someone's all hopes were invested in the stock market. The other person had an IUL. But thank God for us, you and I, we have a stock investment and we are also going to have an IUL. So what happens over here? What happens over here if it goes up, we are covered because we talked about this last week as a midterm. Now we are looking at an option which is also going to protect you when something like that happens. So these three tools don't go behind. Now let's look at this part. So in 2020, year to date, the person's investment went down 34%. So the total amount he had gotten was 465. He had 465. And remember, capital gains tax, 25%. So he decided to take this money out to do some project. When he went there, Uncle Sam said, my friend, you have to pay taxes. So he was charged with this amount, and they took this whole amount from his investment, and he had to go home with 348. So all this time that he invested, look, he's getting 348. Someone who had another option, which is the IUL, being protected with 0.75. You see that? Let's look at this part. I talked about cap, right? So around this 1998, look at that. The stock market went up 26%. There was a cap, the cap that I was saying, 15%. The IUL company didn't give you the whole thing, but they offered something very powerful, the protection, which is 0.75. So this is how the cash value grows or the cash grows in your IUL policy. Let's move on. All right. Mhm. So what I explained is over there. Now, let's look at one of the spies in IUL. If you want to do IUL, guys, listen, it should be well structured. I know you may be researching a lot. If your IUL is not well structured, you will condemn it. It's like a tool. If you buy a knife, let's say this is a knife, you can use this same knife to prepare food. You can use this same knife to do something bad. I'm talking about this. It's a tool. If it is not well structured for your purpose, you will really lose a lot of money. So, as I always say, my team and I, we are all J-1 teachers who are financially literate. We sat down. How can we use IUL to benefit us after this program? That is where we found out something we call max funding. Max funding. So, max funding, just as the name goes, max funding. Funding is putting in lots of money. So you are putting lots of money to the max that IRS allows you to. So that is where something we call MEC comes in, modified endowment contract. So as I said, there's a threshold. Any IUR that you do, there's a threshold. Let's say the threshold is $10,000. You cannot fund your IUR policy above that threshold. The moment even $1 goes beyond the $10,000, you will pay taxes on every earnings you get. So it is one of the features of a well-structured thing is you should always stay below that threshold, which is the MEC, Modified Endowment Contract. It is the law. All right. So let's look at what max funding is. Now, a standard IUL, if you have an IUL policy and you want me to review for you with my team, we do it for free. Actually, I'll drop a link in the chat section. If you want consultation, one-on-one consultation, please fill in that details on the form and I'll have consultation with you. My team and I will do a fantastic job. As I said, this well planned by by J-1 teachers for J-1 teachers as well. So that is it. So max funding is the trick. A standard IUL, you pay the minimums. I'm going to show you two policies, right? A standard IUL, you pay the minimum and your cash growth is very, very small. But when it comes to max funding, it is well planned and well structured. In fact, let's look at these two things so that we can understand that. Let me stop sharing and share the screen to you. Okay. So these two things is what I want us to talk about. Okay. And there is another one. All right. Okay, good. Okay, so I'm going to share my screen right now. I'm going to show you if your policy is not well structured, the problem you get. Okay, now let's see this. Where is my screen share? Okay, boom. All right, so these two things you see here are sample IUL policy for a J-1 teacher. I'm going to explain it to the basic knowledge or with the basic terms. So let me zoom in over here. Let me zoom in over here. Let me take my vanishing highlighter. Okay, good. So this right here that you see, year means the number of years of your policy. The age is at any year, how old would you be or how will you be? And this is your premium for the year. This is a standard IUL right here. This is a standard IUL, right? And these areas means how you can access money from your policy. You can either do it by withdrawal or by loans. This right here is the cumulative. Since we are teachers, we know what cumulative is. Year one, this is how much you've paid into it. Year two, how much you've paid. This is the regular IUL. That is not well structured for a J1 teacher. I highlighted for a J1 teacher. There are a lot of people selling IUL out there whom have never been on J1 program. They they have green card, they are citizens, so they don't really, or they are not so much empathetic for us. So we understand our situation and we have structured it according to our situation. So this that you see here, cumulative is every year how much you would have put in it. So first year, this is how much you put in it. Second year, total. That's it. That's it. That's it. Policy value. Remember, I said any money you pay into your policy is linked to a stock market. It is not invested in the stock market. So the IUL company will give you their rate of growth. So this right here, that thousand something that he paid, this is how much it grows over there. This 2487, this is how much it has grown till wherever it goes. So as I said, it is a permanent and a long-term financial tool. Please take note, a long-term, a long-term. So it goes till. When you become 55, it will still be there. Now let's look at what a max funded IUL is. A max funded, which is the best tool for a J1 teacher. Over here, the same thing. Wait, so I do also explain these two things. So policy value I've explained. Now cash surrender value is the amount of money that an individual can access from their policy at any time. So in year one, because it's not max funded, you can't access any money from it. Year two, you can't get any money. Year three, you can't get any money. Year four, no money. So year four, this is how much you can get. So it's not helping us. As a J1 teacher, if they tell me to go in the third year, I'm going home empty-handed. This is not going to help me. So if you have any policy that has these zeros, please reach back to me. I will review your policy with my team and we see how best to help you. If you don't have it yet, my brother, you are losing something. So this is a regular IUL. You pay all these things. This is very basic. 1,002 is like $200 every month. So you pay this. That's how much you can afford. Now, over here is death benefit. Death benefit, I've explained it. If you pass on, how much will be paid to your beneficiaries? So if this is my policy, if I pass on right now, this is how much my wife will get. That is it. And I've already told you about the protection, chronic and critical illness protection. If something happens to me right now, the IUL company can pay up to 90% of this amount. So let's say I've got an accident, I'm immobilized, I'm staying in bed, someone is taking care of me. If my doctor writes a report to them, this is how much I may get up to 90% of this amount, 150,000. And if I decide to go back home with 150,000, it's not that bad money, 150K. All right. Now let's come here. This is a max funded policy. I'm going to zoom in big time. If you let me cancel it and zoom in big time over here. Okay, good. So at this point, I've explained all the columns. Year, how old your policy is, age, any year, how old you will be, withdrawals, policy, cumulative, policy value, cash value. We've explained all that. Now, this person right here paid in the first year paid 8,130. It is the same death benefit, the same death benefit you see here, 150,000. But he max funded it. This is something we call 7-pay. So 7-pay is the maximum threshold that you can pay into your policy. Then you can use it as a retirement account or an investment. I said IUO is not an investment or retirement account. But if you max fund it, as a J1 teacher, it goes into your favor. So this policy right here was max funded. Other name for it is 7-pay. That is the maximum amount. This he cannot, or he wouldn't allow, he wouldn't be taxed to pay tax on it. So look at the cash value. In that same year, he can get how much? 4,779. That same year, Charlie. That same year. Death benefit was 150,000. That same year, he could withdraw 4,779. Let's look at third year. He came here in year one, and third year, he didn't get any extension. But because He was able to max fund his policy. He paid this amount year one, year two, and year three. Then he left. Look, all these places are zeros. Nothing happened again. There was no contribution. There was no premium. Now he left. What happened? So the premium stayed the same because he couldn't add any extra monies. But let's look at the policy value. In year three, before he left, how much was it? 25,206. It is even more than the total amount of money he contributed into his policy. More than that. And we said it is a long-term, we can use it as a long-term retirement account. So don't go and touch this. Let's say God protects you after 10 years. The 10th year, look at that. You'll be 42 years. Look at how much he can take out. He can take $34,000 from it. This is a well-structured IUL policy. Let's say year 50. You need money for something back home in Ghana. This is how much he can get. Year 50. He can get 55,000. On top of all these, if something happens to you, the IUL company can pay you up to 90% of it. Your money, you don't lose your money. If the US economy crashes, this, you can still have access to it. This, you can still have access to it. So this is an example of it. As I said, IUL is custom made. Don't look at someone's policy and assume. If you want to understand properly, just click on the link that says one-on-one consultation. My team and I will have perfect time for you. We will let you see how a customizable max funded policy looks like. Don't use this as yours. This belongs to someone who is 32 years, who decided to write 150,000 as their death benefit. So that is it. Now let's move on to our main slides. Okay. So now you see the weapon for us. It is what? A max funded, well-structured IUL policy. That is what we are after. We don't want anything else. If it is not well-structured, we don't want it. So what I explained, this sheet right here summarizes it. Now, let's look at the power of IUL. The greatest features that made me add to my financial portfolio or my financial weapons. The first one is tax-free retirement account. Have you seen that I have quoted the retirement? As I said, it is not a retirement account, but in our case, we are going to use it as a retirement account because our SNIT back home is stuck. We are not going to get it. Even if you get it, it's very meager. It is very small. So you can use this as a retirement account. I showed you a max funded template or sample. The other thing, the biggest one that made me buy one is the critical and chronic illness. A friend of mine, as I said, went home with stroke. Not one, not two. I know other people who have gone home with several illnesses, and they are going home. If you get home, first 3 weeks, you have eyes on you. So many people will be hailing you, bugger. But after 3 months, if you don't have anything protecting you, I'm sorry. So let's say, God forbid, I fall sick, I get critical illness. At the moment, I'll just let my doctor write a report to the IUL company. And any amount I have on my head, I'm entitled to get up to 90% of that amount. Why should you get sick for free? Why should you die for free? Why should you get sick for free? So that is it. That is the main reason why I added to my portfolio. The next one is the cash value accumulation. I have high yield savings account. My money is working for me. I have stocks investment. My money is working for me. I need something that will accumulate money that gives me protection for my money. Every money I put there is not going down the drain if something happens to the US economy. So protection, cash value accumulation. The next one is estate planning. When you say estate, anything that you die and leave behind, be it asset or liabilities. That's what we are talking about. So if I die right now, if I go to heaven right now, my wife is a millionaire, or my wife is rich. Let me put it that way. My wife is rich. My mom, please forgive me. My wife and kids will be rich. So that is it. The other thing is stock market crash protection. I've explained 2008, there was a crash, but you saw someone who had life insurance because of the flood protection, his money was intact. So you get protection for your money. The other one is income that follows you home. If we should move our butts from this place right now, some of us who are going to Canada to teach, we have that money still. We can access that money over there. If you are going to Ukraine to teach, hey, no one is going to Ukraine. If you are going to, let's say, Switzerland, New Zealand, Australia, we can still access our money over there. If you go back to Ghana, you can still access your money over there. That is why in day one, we said exit plan, make sure your bank account is still running. Don't close it. If you want money, the IUL company will just send all the money you need into your thing and you take it, you chop it. All right. The other spices is the flexible premium. If I should switch to a different school district that pays me less, I can call the company, Charlie, my income is low now, so adjust my premiums. Whole life is not like that. Term life is not like that. The other thing that is very major is probate court. I want everybody to go online, search probate court near me, search it right now. If you don't know what probate court is a court system or a court. If I pass on right now, every investment, every asset that I have, the US government will freeze it. They will seize it until they have done the due diligence, making sure that I don't owe the government, I don't owe any individual. If I owe, they'll service all those debts before they can release any of my assets to my family. Your checking account, your high yield savings account, your stock investment, all these things are affected by the probate court system. So if something that will bring in as you are toiling, the money you are stacking in there in your savings account, if something happens to you right now, that you though you came here to do 3 years, 5 years, the US government will seize them. They will seize it, and it can stay there for even 2 years, and your wife and kids will struggle to send you back home. That's it. So if you have an IUL, any contributions in there is protected. The moment you pass on, your beneficiary gets their entitlement. That is it. So these are the spices in IUL, the great features. Flexibility, you avoid the probate court system, you get tax-free retirement income. When you are old, you can get all this money. Critical and chronic illness protection. If something should happen to us, we are not dead yet, but as we are living, we can chop the money. As I'm living, I can still get money from my account. Let's say in 10 years' time, I need money to buy a house over here. I can take money from my policy. I'm living. I can take money from the policy, use it to buy whatever that I want. Back home in Ghana, if I take $10,000 back home in Ghana, it's 1 billion, 1 billion, 1 billion back home in Ghana. All right, so these are the spices on the or the juices in IUL. Flexible premiums, you have a probate court, and your money grows protected. All right, so let's look at this. Whenever I get to this story, I'm very, very emotional. One of our sisters from Ghana came on green card as a nurse, right? And he was earning like $70,000 every year. We said nurses are earning so much. And unfortunately, she was attacked by colon cancer. You know, cancer is chronic. It's very hard for you to be freed from it. The moment something bad happened to her, she contacted her IUL company. And as I said, the protection came in. The company was able to pay up to 90% of her death benefit. She is living, but she still got protected. So this our lady right here is called Grace, who was issued is it 2024, just last 2 years. 2024, just last 2 years, just a blink of an eye in the back years. She was paid $947,000. Start calculating. If this money go Ghana, what you know if you do? Start calculating. So the keynote, guys, we know we are hardworking. The children are stressing us. I know people who are getting stroke from all the stress. People are not eating well, diabetes, other stuff, high blood pressure, and other stuff. Don't fall sick for free. No one knows when sickness is coming. We are not praying for illnesses to come into our lives. But this is an insurance, something that got you when you fall sick. So Grace, who's also a Ghanaian, got protected. She took the money and she was on chemotherapy all the time. And by God's grace, she's healing gradually. Though it is chronic, but because of money, her treatment is going on so good. She had a mortgage she had to pay off with some of the money because this money, if you had a mortgage that amounts to 300,000, if you take 300,000 from this, some still day, plenty day. All right. Now let's look at IUL and other financial tools. We all right now we've understood that you need high yield savings account, you need brokerage account, invest in stock. Let's compare all these to that. Tax-free growth, high yield savings account, you pay taxes on every interest you get, capital gains. CD, the same thing. Brokerage account, the same. When it comes to IUL, you don't pay taxes on your growth. The cash value, you can take money from it without paying taxes. Death benefit, high yield savings account. If you die now, the money in there, the government will seize them. Then go hold them for 2 years before they make sure you don't owe anybody. All these account to these ones you see here. Let me pick up the pen. All these you see here, the same thing. All these. It has no death benefit. If something happens to your wife now, they cannot get the money that you bequeathed to them. IUL, you have death benefit, huge sums of money. The rich people you see them in this country, okay, they all have these. They add it to their net worth. They have stocks. They have life insurance policy. That's why they can say that I'm 1 trillion net worth. I'm 200 million rich, and all that. They have this in addition to that. The next one is the critical illness. If something happens right now, your high yield savings account, that 20,000 that you have in there, if you are admitted in the hospital for just 2 weeks, that 20,000 is gone. This can protect you. This can protect you. This cannot protect you. But your IUL has you. Let's say you have 500,000, you have 300,000 as your death benefit. If they are paying up to 90%, okay, up to 70% of it, how much is that? It can clear your hospital bills and you still come back to life. Protection. So right here, if you lose your money in a bank, as I said, make sure it is FDIC insured. FDIC insured. Your high savings account, that 20,000, that 30,000, that 50,000 you have, the government will pay for you. But if it goes beyond 250,000, you lost your money. CD, the same thing. This right here, you can lose even everything. Stock market, when it crashes severely, you can lose everything. But it don't usually crash beyond. But when it crashes, you got you 0.75 floor. That protection is there. You don't lose your money. So me, I have first one, high yield savings account. I have brokerage account. I have IUL. Which of them do you have? The next one is no contribution limit. This you can contribute in the if you earn, you pay tax. This contribute no limit. This no limit. You put money in there. But when it comes to IUL, there's a limit on the 7 pay. I've explained what 7 pay is. The maximum threshold that you can stay beneath to avert paying taxes to the government. Accessible from abroad. This right here, if you don't do your things right, you may not even be able to access it. I've taught you how to access your money abroad. This two, you go fit access some. This, you can also access it if you use the right brokerage account. If you don't have a brokerage account with IBKR, if you have Fidelity Robinhood, my brother, I've advised you, I've done the due diligence, vetted and approved by SDA. So make sure you also have IUL that you can access from anywhere in the world. Estate planning. If something happens to me right now, my kids, that small money in the policy, if the government seizes it, my wife visa may not last her enough to get the money after all the litigation. This right here, this right here. But when it comes to IUL, I add it to my will, or my wife is aware that I have it. If anything happens, she will just send my coronary report or my death certificate to the company, and they'll pay her all the money that I wrote on my head. So that is it. It's not an insurance, but it's not and also it's not a retirement account. But we J1 teachers, we are using it as a retirement account because I've shown you how a max funded, well structured IUL policy is, and you are able to pay the 7 pay for 3 years, it can take care of you even for 60 years. So it gets to the point that it lapses. All right, let's move on. So this IUL is the next tool that if you don't have it, please click on the link that says one-on-one consultation. IUL is not one size fits all. Please take notes. And if you make your research, many people may talk against it because many people are doing it from people who don't understand our situation. We are J1 teachers, we are temporal in a system. So if your agent is not explaining things to you right, please click on that link. I consult for free. I'll just let you understand. Bring your policy. If you have it, to fine. If you don't have it, click on that. You have a nice consultation. I'll let you understand why you need it in addition to your financial portfolios. All right, let's move on to the next thing. You end very soon, then we take questions.
Mm.
All right, so the credibility now.
That's different.
Who is that?
That's a chicken balloons.
Please mute yourself. Who's that? Who's that? All right. So the credibility of IUL. I know some of you may be researching and all that. Now, all the big banks in this country, okay? All the big banks in this country, their tier one capital is in life insurance. If Bank of America can pay you interest, it is because they are hinged or their foundation is on life insurance. You can go Google right now. Just go and search bank,
Now, I've been there to teach that.
banks own. Who is that? Let me mute this. Who is that? Who is talking? Okay, good. I got you. So if you go to Google right now, search for bank-owned life insurance, you see that. In fact, I have a screenshot that I saved. Let me show you this. Where are you? Where are you? Got it here. If you want to know how credible life insurance is and how powerful it is, the rich people in this country are using. Let me show you this. So if you go to Google right now, just search for banks that have IUL. Where are you? I used to have this. If I don't, oh, where are you? All right, I'll drop it in the comment the moment I find. Let me search here. Mhm. Okay. Mhm. So all the big banks that you know of, they have IUL as their main capital. Every big bank you see out there, every big bank. So let's continue. I'll show you that page. If anybody has it, any of my team members, if you have it, just drop the link, and I'll show you to everybody here so that they know how this powerful tool is. Let me. Okay. So all the big companies you see in this country where you invest or where permanent stay people over here are investing their money in, they also use IUL to fund themselves. So we can basically conclude that IUL or life insurance is the spine of this economy because banks are premised on that. High net worth people, Elon Musk and the rest, they have IUL as part or life insurance as part of their whole things. As I said, if you want to use it, it should be what? Max funded and well structured for your situation. It is not a one size fit all. All right. The next thing is estate planning. So we are here, we are toiling for our family members. If something happens to us, what do we do? If you have a life insurance, your property or your asset don't go to probate court. I told you to search online. And your beneficiaries can access any money you have in there tax free. And there's no boundaries. So even if you are in Ghana, you are in South Africa, South Africa, no, wherever you find yourself, you can still access money from your life insurance. The next thing is you can even name your grandmother or your mother back home in Ghana as a beneficiary. You also your death benefit is also growing. If it started with 500,000 as your death benefit, your cash value is always added. So one key thing you can use to detect if your policy is not well structured is when your cash value is not added to your death benefit. Your money is growing. Why is not being added to your death benefit? So that is a sign that you can know that the policy is not worth it. One other sign of a bad IUL policy is if you cancel it at the early stages, because you said it's a long term, so you should understand it is a long term too. Don't start it and go back. My friend said that no, it is a long term too, and we are using that as our retirement account. So if you are going there, at least you're saying just envisage yourself. If you are able to max fund it for 3 years, you are secured. All right. So that is these are how you can use it as estate planning. If you pass on by God's grace or whatever, if you pass on all the property or all the asset in that life insurance can be given to your beneficiaries for them not to pay tax on it and they can enjoy it whether they stay here in the US or they move to their country. So that is it. Now let's look at our two because we have concluded today is the last day. So let's do this checklist. Now, if you have a high yield savings account, we have about 30 people online right now. If you have a high yield savings account, I want you to type one. I want to see 30 versions of one. If you have a high yield savings account right now, type one in the chat session. I'm going to share that too. If you have a high yield savings account open, you are secured because you can't let me talk in vain. If you have a high yield savings account, now type one in there. If you don't have it, just type two. My team will contact you, will guide you. Maybe you're having challenges with it. So, type one in the chat session right now. If you have a high yield savings account, because we want to make sure this checklist, I didn't talk in vain. It was a master class. I could have charged money for this, but it was given for free. Okay.
Okay.
Okay, someone said, Jones said he doesn't have it. Jack, you don't have it. Okay, so Jack, click on the consultation link. I'll
My
assist you through it. Please mute yourself.
on program.
Benedicta,
Ma.
I'll also
I'm
assist.
not from country. You can't say yeah. Party. I say it's a yeah program.
Where is this?
Just
Whoever is talking should please mute themselves. All right, Benedicta, you also need help with it. So I don't see 30 inputs. I see, let's say 15. The others, what are you doing? Please answer me right now. I want to make sure I didn't talk in vain. The class, the master class, I could have charged money for it, but it was done for free. Mr. Barnes, what are you waiting for? Hey, which risiko? You are losing money. You are losing money on the table. High yield savings account, drop one. Drop one right now. Drop one. Let me see. If you don't have it, drop two. And click on the consultation link. I'll guide you how to do it. High yield savings account, drop one right now. Right now. Right now. If you don't have high yield savings account, that's what I'm talking about. If you just joined us today, it means you don't have high yield savings account. Drop one. I'll guide you through the process. My team and I, we are well versed in it. We show you where to put your money to get the best interest on it. Drop one. All right. It means those with the two, I am expecting you to fill the link. The consultation, let me drop it again. So consultation link, I'm going to drop it right here again. Okay. Is in here. Click on it. If you don't have a high savings account, I'm pretty sure you are having challenges with it. I'll explain, take time explain to you again, and I'll let you get one because you are losing money on the table. If you are saving in a traditional account, you are losing money. So I've dropped the consultation form over there. It's for free. I do free consultation because it's J1 people. I do consult with my team members and we charge something small if you are not a J1 teacher. So please, 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 if you are doing this for free, don't let us do this in vain. Please. So all these people that typed one, we are good. Now let's go to the next two. As I said, me personally, I don't have layer two, which is CD. If you have CD, those who have CD, tell us about it. If you have CD, type one over there. I'm pretty sure some of us don't have it. So CD is like fixed deposit back in Ghana. Okay, now you have CD. Wow. Okay, me, I don't like it because it locks your money up. So if you have one, just type one in there. Only Nan says she has CD. Okay, that's good. All right. So I don't believe in CD. So that one, but if you want it, it's also part of our tools. That's why I've outlined these. Now the next one is brokerage account. So layer 4 and layer 5. How many of you have it? We talked about this just last week. Drop one if you open a brokerage account with Interactive Brokers. Drop one. Drop one. How many of you have investment in a brokerage account, in stocks, in ETFs? If you haven't opened it, it means you are losing money on the table. I want to see more ones. Okay, Josh, good. And if you have the account, that is not enough. You need to buy low risk ETF because we are teachers. We don't do. Okay, Temitope, I didn't know my fellow Nigerian was here. All right, that's good. That's good. That's good, my brother. Thanks so much. I have several Nigerian friends that came through my teachings. Some of them are here. Thank you so much for joining, bro. Okay. Type one. If you have a brokerage account, can we use different numbers? What do you mean, please? Please explain. Use only one. Use one to answer that you have a brokerage account. Just one. Number one. Ekume, one. Use number one. Type number one to let us know that you have a brokerage account because I want to make sure that all that I offered for free is being uh prosperous in the lives of okay. One for okay, good. So if you have high savings account, we are done with that. If you have CD, I said you should also type. I just want to confirm. So this time we are talking about brokerage account. Hey, if you don't have it, please type two. If you don't have investment in stocks, ETF, whatever, please type two. Hey, my bregu, my bregu, my bregu. I'm dead. And then all that I talked about, but I'm pretty sure some couldn't join. So I'll give you the benefit of the doubt. All right, please type two if you don't have a brokerage account that you are investing in that can also take care of you when you go back home in Ghana. That's why we are doing this. Two for all. Ata. All right, so Phil, I'll drop the link again. The consultation form. Fill it right now. Fill it right now. Fill it right now. My team and I are waiting on standby. Uh, I hope they are taking notes. So just do that. In the form, you will select the financial portfolios you want details about, and for you to get one, you just select. We have high yield savings account, we have brokerage account, we have index universal life, which is IUL. So, all right. So fill the forms right now. If you want to have any of these accounts, please. Free consultation. I'm not charging money for it. Free consultation. If you need high yield savings account, if you don't know how it works, what is it? Fill the form. If you want to know about how you can invest in the stock market, fill the form. If you don't know what or how you can use IUL as a retirement account, it is not a retirement account, but we J1 teachers, you can use it as retirement account. From Nigeria, you can use that retirement account. Remember, I said since you moved the past 3 years, you have not been paying SNET back home in Ghana. I don't know how Nigerians call it. So if you're in Nigeria, how do you call your social security account? We call it SNET back home. Tell me, how do you call your retirement
Ɛnɛ
account back home?
ofie nti ɛnɛ yɛkɔ rounds kɔdi dwa ɛbɛyɛ
Latif.
aduane.
Let me see.
Ade a mehwɛ a ade a na meka obi sɛ ayɛ omu mo holiday na mo busy day.
Who is that?
Ati fie bɔkɔ.
Oh, where can I find this person? Okay, good. All right. So fill the form right now if you want to get any of this. Well, I said three things. A short term, we need high yield savings account, which most of us have it. Middle term, you need a brokerage account. Long term, which can protect you even whilst you are living, even as you have passed on, and it can take care of you as a retirement account when you are 60, when you are 50, when you are 70. Are you any of this? Fill the form right now, and my team will contact you. I've explained all the benefits. So, in a nutshell, exit plan. We've talked about it. You have to make sure your account is still opened. I told you so many things you can do. If you want to leave after the 3 years, please make sure your account is still running. You can use Google Voice or you can go to your bank directly. We did this in the first day. So if you want to leave, if for any reason you are leaving this country, these are the things you should do. Make sure your checking account is still running. For your phone number, they are going to cancel it because you can't afford it. So you need something called Google Voice number. Register for that. Two, go to your bank. Tell them that you are going out from the country for, let's say, 6 months, and ask them what are the things you should do to make sure. Okay, it is called it is also called staff contributive pension. Perfect. Tell me, thank you so much. So let your bank know that you are going out of the country for, let's say, 6 months, and they will tell you all you need to do. If you have a credit card, tell them you want a credit card you can use outside the country because you're going to spend 2 years and come back, right? So you have to make sure all your policies are well run before you move. So these are the things you should do. Keep your US bank account open. And for the 3 years that you want to use to fund your policy, to pay for your saving pay, make sure you do it diligently, consistently. Service that I showed you a sample of a well structured. As I said, there are a lot of agents out there, but they don't know what a J1 teacher needs. We are in a situation. It is designed by J1 teachers for J1 teachers for J1 teachers to benefit from it. So if you don't have it, please fill the form. You will thank me later. Next 10 years, you say, Mr. Bray, you helped me or you really helped me. So if you don't have it, please click on the consultation link and my team and I will get to you any of the accounts. So any question, we are done with it. Any question. So today, in a nutshell, we talked about how you can use Index Universal Life as a retirement account. What is an Index Universal Life? Is IUO is a type of life insurance, and it is a financial safety net. When you pass on, your beneficiaries get it. All right. And why should I pay money for someone to enjoy it when I die? That is the normal life insurance thing. But this type of life insurance, whilst you are living, one, you can access money from it tax free. Two, we have strategized it and planned it well that it can take care of you when you are old. So we can use it as a retirement account. Who is this? We can use it as a retirement account. Three, health protection. As you are working here in the US, we are working hard. I know some of you are working even right now, driving Uber, DoorDash, and other stuff. If your car should crash right now, that health insurance your sponsor is giving you is nothing. It is nothing. So you will be protected. And God forbid, if you are immobilized, like you cannot work again, you are in a wheelchair, this money can protect you. This policy can protect you. It can pay you your income. So if you even you fall sick, you get an accident, you're immobilized, this will take care of you. So why wait till you fall sick with no protection? Remember, Nurse Grace, our fellow Ghanaian nurse who was protected. She got cancer. She didn't call for cancer. She didn't call for any accident, but it came into her life. And because she had IUL, she was protected. Another importance is your money is well protected. Any money you pay into the life insurance is not like the stock market that you lose everything when the stock market crashes entirely or some of your money goes away. Anything you pay in there is protected. Remember, it is a long term and it is not a one size fit all. So get an expert who understands your situation and knows how things are done. So any question or any suggestion, my team members, if you are there and you want to add something, you can come in.
Yeah,
If you want to ask
I
any
have a
question, just show
question.
up your hand. And
Yeah, my hand is up.
so three things that we talked about, just make sure you sign up. So I'm going to stop my screen share. Any question, any add-on? Okay, Richard Banks, you can talk
Okay, all
now.
right. So, good evening, Mr. Abre, and thank
Good
you
evening,
for the
boss.
education. Yeah, the very first meeting I was not there. That is why I've not pinned my high yield saving account.
Okay.
But quick question. I think I like the presentation you did on the IUL.
Mm-hmm.
When I came here first year, I'm just a fresh teacher here. So one guy explained this IUL to me about 4 months ago.
Mm-hmm.
Then we were talking about it, but I think you have explain it quite well for me to know, because I asked this same question that, so when I go back to Ghana 2 years, can I access my money?
That is it. That
The
is it.
question was like, yes, no, not sure. And I also just posed a question that, let's assume the next 2 years I did not get chance to come to US again. Let's assume that it might happen. What happened to my money?
That's it.
So then he was explaining something like the insurance have uh, something like a business with some of the banks, and that I wasn't getting all that understanding well. So I just have a second thought to say that, okay, let me check and see how best it will be explained to me during your presentation. And I think I've really, really understood it well.
Yeah.
But where I want to also find out is the surrender value. You
Okay.
see, when you say something, you have surrender it. It
Okay.
means that, is that the end of the policy?
Okay. I'll explain that.
Because that's what the question I asked him. Because the moment Ghana, you hear something like a surrender, it means that you are bringing to the end of the policy.
Okay.
So if I want to take, then he was explaining something like you can take some as a loan as you did.
Okay.
So am I taking the loan as a surrender value loan?
Okay.
If I take the surrender value loan, does it mean that my policy is not terminated?
Okay. All right.
Yeah.
So I'll answer to address everybody who has the same question. So surrender value is, they coined that term because that's the cash value that you have at the moment, something you can take out from the policy. One, if you want to surrender, it means you are canceling the policy, right? That is the term you used to know back home in Ghana. So if you surrender, that is the amount you get at that point. Two, it also means the amount of money you can get at that point in time. Let me bring out the max funded policy sample that I made. Where is it? Give me just 2 minutes. Where are you? Okay. Max funded. Okay, good. So I'm going to share my screen again. All right, so this is what I use as illustration for the max funded, the well structured. I always put it in code, well structured. So this is what my brother is talking about. Let me pick up my pen. When he says something is surrender value, first I said, if you are stopping or if you are canceling the policy, this is how much you would get. Now remember, it is a contract. As I said, focus on it that it is a long-term financial tool you want to use. So if you cancel it in the initial stages, this amount you see here is what you're going to get. You are losing money. Look at that. Sorry. Cumulative, this is how much you paid into it. And this is how much you are getting at that point. So if you cancel it, you have lost money. So why would I cancel it? That is it. Now, if let's say you wait till 10 years, right? Look at the 10th year. How much have I put in total? 24,000. Look at how much I can get at that point. So why should I panic? Let someone confuse me. I was that. It is a long-term financial tool. And if it is well structured, my brother, you are protected. So he also asked about loans. Now, we have two ways you can get money from your thing. Ghanaians, as we are, we don't like loans. So you can go for withdrawal. Now, the reason why most people don't recommend withdrawal for ourselves is, if you take withdrawal, it goes against, listen, it goes against your cumulative that you've put in. So all this money that you have put in, if you take withdrawals, let's say in year 10, right? Year 10, I put in 24,000. If I'm going for loan, this is how much I can take. 24,000. The moment I take more than 24,390, it attracts the punishment from IRS. You pay taxes on it. If you take the exact amount over here, you are taking it as a withdrawal. It's not a loan. Fine. But the moment you take a withdrawal, it affects the principle of compound interest. It affects the principle of compound interest because this is the seed. This is the seed that we are planting. We are planting this. to yield this for us, the cash value. So if I tamper with this seed right now, it affects all the calculations. So what next can I do? That is when they decided to bring in the loans. And in practicality, no one pays taxes on loans. No one. So the rich people in this country, what they do is, if they have their policy, they use that as a collateral, right? And they'll go for a big loan, and they wouldn't pay any taxes on the loans. They reinvest it in certain companies. They get yields from that. So why we recommend loan is that. And you also ask that if I take the loan, what happens to the policy? If you take the loan, what they do is, let's say year 10 again, I'm going to circle year 10 again. Year 10, I decided, so I got a house. They said the down payment is 34,000. Fine, I go there. Mr. Agent, I want 34,000 for my house down payment. So I need like 34K. Okay, no problem. The moment you take it, and the good news is their interest rate is way lesser than what you get from the bank. If the bank is offering you like 6%, this policy can get you an interest rate on your loan about 2.5%. Look at the differences. So the moment you take that loan, what they will do is they will take the money from your death benefit. So 185 is where they're going to take your 34 thing from. So if you don't pay and something happens to you, instead of paying 185 to your beneficiary, what they'll do is they will calculate this, they will take it from your money, and your beneficiary wouldn't get the full amount. So if you take loan, the policy still runs. If you take withdrawal and it affects the seed money, your cumulative premiums, it affects the compound interest in it. All right. I think one of my team members is on the line. He will also add something. Mr. Noche.
In fact, I'm so excited. Good evening to our
So
brothers and sisters.
try and answer Mr. Barnes. Just add something to Mr. Barnes, all that I explained.
Yes, that is what I'm coming to say. So, like you said, you have said it all, but he was asking about the loan. IUL policy, you have two ways of assessing it: withdrawals and loans. But like you said, if you take withdrawal, it is going to affect your policy value, which is building the policy.
Yeah.
So if you take it, like you say, you're going to pay tax on the interest. But you take it as a loan, you don't pay tax on a loan. But the interest that will be given to you, because it is your money that you are borrowing it from, they are going to credit you back the same percentage that they are taking as interest. Like you say, it's 2.75%.
Okay, that's
so
right.
yes. So virtually it becomes like wash loan. It's like you are not paying anything from the loan. And then the loan you are not obliged to pay because it is against your death benefit. Your death benefit become collateral security. So if you are alive, nobody will come to you to come and pay that loan. If you pay it, it's your money that you are putting it back, and you can take your money back again.
Okay.
So it's like instead of you to go for withdrawals, just take it as loan because the loan you are not supposed to pay.
Excellent.
Yes, if you pay it, it doesn't. So nobody will come to you. It's like you are taking your money. It's like surrounding it.
Me, I won't pay.
But if you pay
yeah, I got you now. But my point is, so if you take the loan, so the policy works.
Yeah, the policy works.
Okay. Now, if I take the loan, let's assume as Mr. Abri circled the 10th year,
yes,
and then I even take a loan like 30,000. Now, this 30,000 go against my death benefit, which is 185,000.
Yeah.
Yes.
Now, so can I also have a right to come and take another loan in probably the 12th year? That should go against my death benefit.
Mr. Circle that one, and let's see the 10th year one that we are talking about.
Okay, so this one.
Okay, so you have taken that.
I don't think I'm bothering you much, please.
Oh no. So I would really suggest you fill up the consultation form, and we have a tailor-made.
But the consultation form, the Google form, next time make the high yield box so that we can take plenty. It allow me to select only one.
Oh, really?
So make that, yeah, the
All right,
Google
so
form.
no
Make
problem.
sure to make
So
that simple.
just let me know when you are available, and when
Either
you
than
meet.
that, I will need to fill three
Oh,
consultation forms for you. Yeah.
just fill one. I'll give you
No
room on that
problem.
sitting. We will talk about
No.
high yield savings account. We'll
Yes.
talk about whatever
Yes,
other things
but
you need.
yes, let's explain this to
Okay,
members so
all right.
that they are also interested and
Okay,
we know
all
how
right.
to.
Yeah. So if you take, thank you so much, and if I like your contribution too. So if you take that 34,000 as a loan, it is again they are going to take it from your death benefit.
Mm-hmm.
If you take it as a withdrawal, they are going to take it from the policy value.
Mm-hmm.
So the policy value is your bank. That is what is creating the compound interest for you.
Mm-hmm.
So the amount that you have taken there, because you still have that 35,000 at the policy value, that policy value is still working. So you are not contributing, but you still come and take when the policy gets to, uh, let's
12
say
years.
15 years.
Okay,
Yes.
15. All
So
right. Let me.
yes, 15 years. So you can still get the difference. You take the 30,000 that you took as a loan, take it from the
46,000.
46,000, the remaining you can still take it. That is
All right.
why people live on benefit in this country. You don't work hard to get money. You use the system and you plan it strategically to be able to use it to benefit yourself, or else you will work till you die.
All right, Mr.
Got
Banks,
you.
do you
Yeah.
understand what he said?
Yeah, I understand it perfectly. So
Perfect.
it's like when I take the 34,000, I wait for the 15 years. So I think
15th
I have
year.
about 15,000 to
15,000.
take again.
Perfect.
Yes. But
Good.
meanwhile,
So
if you took it as a withdrawal, it is going to kill the
yeah, it's
policy
going to
value.
kill the
Yeah.
policy. Yeah.
Perfect.
Yes.
That is
Miss
the question. That is
Miss
what I wanted to.
Benedicta.
Mr.
Hi,
Abre,
Benedicta. Yes, mommy.
good evening.
Good evening.
Please, I have a question about is it the IUL or something? I used to sell insurance in Ghana.
Good.
One thing I noticed is when we sell the insurance, maybe you are paying maybe $5 this year. They said there is something called
Insurance
what
fees.
do we call it? Inflation protection or something like that. So next year it increases, like they have some percentage, the amount increases. I wanted to know whether it's the same here or it's fixed.
Okay.
Like the amount you pay every month or however the
All
I
right.
don't know how
So
to.
my
Do you
policy,
understand what I mean?
yes, yes. So
Okay.
just as we said, every year inflation goes up at least 3% in this country, right? My policy has
Yeah.
been in force for almost 2 years. The first year I paid that amount. The second year I paid the same amount. So far,
Oh,
that is
okay.
it. So it is not affected by what the inflation states. Your thing is logged in over there.
Okay.
Sanoji, do you
Thank
want
you
to
very
add
much.
something?
Yeah, let me add something small. Like you first said that if you have your investment in dollar, it is most of the time it's way better than having it in cities, because in Ghana your money will be, let's say, the inflation will go high because of the dollar rate. But if you have it in dollar here, the inflation, the average is what, 3%. Do you get it? But in Ghana, it can go up because of the dollar. So if you already have it in dollar, there's nothing to worry about. It is just small, and you are not going to pay the same amount. And even if, because this IUL has a flexible premium, it is any time that if you don't have money this time, you are going to pay the next time you have money. And then your money too is also growing compound interest for you. So Mr. Abeda, that he said, book consultation, it goes beyond what he's saying. It has over 62 benefits. But for the sake of time, he cannot say everything. That's why he has taken some few one to just explain. So if you book that consultation, there are a lot of people behind the scene that are going to pull out and even show you the examples. And some of us, we are swimming in it deeply. So there's not everything that we can show publicly. So when we meet one-on-one, we can show it out. Thank you.
Okay, thank you.
Any other question?
No,
Okay.
for now I booked, so When we meet, we'll talk about it.
Okay, all right, all right.
But even
David.
there was no time, like you just select the date or something. There was no time attached to
All right,
the
no problem.
business
So
plan.
since you have your email there, I'll send an email to follow up with some correspondence, and you move on from there. All right.
All right, thank you.
David, what is your question? Mr. Ray, is your policy on 7 pay? Yes. I'm also expanding my policy now. Yes. So a bonus was, I said, now if you don't have a brokerage account, please, please, please open it. And the bonus that I said I was going to tell you is now the Ghana stock market is booming. Please try and download this app. It's known as Black Star app. Let me close this screen. So write it somewhere. You have to invest in Ghana as well because there is hope in Ghana. Let's not write it off completely. Okay. All right. Let me browser. Where's the browser? Okay. So this is the app. You go to Black Star Investments. All right. So this is the app. There are other websites. So, but this says Black Star Group. So when you go there, open an account. They will need your Ghana card. I don't know about Nigerians. I don't know if there is a way you can do yours or not. So since you are in the US, invest in US market, invest in the Ghana market, and you will never regret this. That 3 year stay you came here to spend, it will be fruitful. I know many rich people in Ghana, they don't do any job. All they did is the short stay that they came to US to do, that's what they are eating from. So let's not, and if you want to invest in Ghana, we have stocks that is like one CD, two CDs, and other stuff. One CD is like, is it 10 cents? Yeah, 10 cents. And since you are in the US, you can buy more of that and it can give you lots of money. I use my MTN as example. I bought I didn't have money at that time. Ghana teacher, 400 cedis. Now it is worth 2,700. I'm still keeping it. So it can also become part of your retirement account because we don't know what's going to happen here. After the 3 years, are you going to stay? I don't know. After the 5 years, are you going to stay? We don't know. So you have to plan ahead. Three things: brokerage account, high yield savings account, index universal life. Protect yourself. If there's no other question, I thank everybody who was able to join. Is there any other question, fellow teachers? And we've met for 4 days. It has been very, very fruitful. And as I said, my team and I, we are offering free consultation. We are doing for free because we are all J1 teachers. We will let you understand what you are doing. Okay. So Benedita is asking, what do we do with it? Also, the app is a brokerage account where you can trade on a Ghana stock market. Let me stop the screen if I can log into my account and show you. Since I said it's a bonus, let me do that for you. Okay. Let me see if yeah, guys, give me just some few minutes. Let me see if I can log into my account. I think if I can only log on from my phone, I'll do that from the phone also. Mhm. Oh, okay. Let me see. So I'm going to share my app from my iPhone if it can help. All right. Share screen. Okay. Advanced. Mhm. Okay. All right. So if you can see my phone now, this is a special phone I've dedicated for my Ghana MTN number. So this is the app. It says Black Star. So when you open it, so I bought this especially for my stock in Ghana. So I started just last week, okay? And this is how much I've got so far. My money has gone up 4% just last 3 days. So I'll click on it. And so far I have something called Zen Petroleum. For last 3 days, I've gained 5 cities. Look at that. I've gained 5 cities. I bought just 65 Ghana cities. I think I bought 60 cities or so, and I've gained 5 cities extra. It has gone up. It is called Zen Petroleum. It's another stock on the Blackstar app, just as the brokerage account you have in the US. The next one is MTN Ghana. Actually, I have MTN shares. I did without this app, so that one is working, and I decided to buy some MTN shares over here. So what you are using the Blackstar app for is it is a platform that you can use to trade the stocks on the Ghana stock market. So that is it, Miss Benedicta. So if you heard about it, that is it. And as I said, Casa Precon, which is the longest beverage companies in Ghana, is also selling out some shares. They are soliciting for almost 700 million Ghana cedis to build a new company or a new factory. All right. And you know, Casaprecon Awake, they have Casaprecon Gym, they have a lot of product. So it is a very promising company. So we should make sure, and the least you can buy is 2,400 Ghana, it's like 2,000 shares. And it has a deadline. So latest by June, it is ending. So since we are on the other side of the world, we are in the US, $240, I know it cannot do you anything over here. Invest in this company, and the next 10 years, you call Mr. Abri, you really help me. So please, we've invested, we've bought insurance in the US, but let's also invest in Ghana. There are several companies. EcoBank is there, GCB is there. So I'm going to buy Casaprecon right now when I'm done with this session. So Casaprecon, I'll search it over. So when you go there, there's the ticker symbol for Casaprecon. Just you can type Casaprecon, and this comes. So it's KPLCIPO. So I'll click on that. And if I want to buy, if I had money in my wallet right now, I'll just click on buy. And I'll type that 2,400. That's the minimum. Any amount beyond the 2,500 is what you can invest in at the moment. It's a short time. They are raising money to build their company. So make sure you don't stay out. I said $250,000. Oh, sorry, $240 can't do you anything. But if you invested right here, you will come back. So I'll just type in the 2004, and I'll proceed. He said I don't have enough because I'm now going to load into it. And the good news is you can buy with your card, not compulsorily using your mobile money account. You can buy with your card, your Visa card. They have that option. So this is how you can do it. You can just go to the app. Let me cancel it. I'll just go to my wallet, and to add money, where is it? I will say add cash. And don't be scared, it has withdraw. If you have money in there, if you have interest, if you have dividend, you want to take it out, you just go to withdraw and you type the amount you want to withdraw. So you can still run it as you are in the US. So if you want to add cash, you just go to add cash, you type the amount you want. Let's say I want to add the 2,400 that I'm talking about. I'll just hit on continue, and it will give me the payment option. They have mobile money. Some of you don't have your mobile money sim over here. If you have your bank account, I think unfortunately they have these two banks, Car Bank and First National. That's no so good news for us. So what you can do is you can either use your mobile money you have back home in Ghana, or if you have your number here, you can use that. I have my number, so I'll just type in the things I need. Or if you think you have a friend or a family member whom you can send money to use his or her number to pay, that one too is an option. Or you can go to online checkout. So for online checkout, you can use your card and try and do it in business hours, during business hours in the US. So you see that you have bank card. I just check on the bank card. What is it? Okay, fine. So that is it. Okay, good. It's working now. You type in your number or your US number. You type in that. You type in your card details, and bam, you fund your wallet. So that is it. That was the bonus. Invest in Ghana stock market. There are a lot of companies out there. A lot of companies. It's good to invest in US dollars. But remember, I don't gatekeep information. I'm doing it. You too can also do it. Do it and just be safe. And even if you are in Ghana, you can also trade in the US stock market using this Blackstar. Look. So you just search the VO that I mentioned. Let's see if we can find it over here. Oh, it said boo. Sorry. The VOO. Let me see if I can find VOO there. So VOO US, you see that? I'll just click on that and I can buy VOO ETF. This VOV. That's not what I want. I want the actual VOO. Let me see. So this is the actual VOO. Look at the trend. It is really booming. 53%. And look at it. So you can also trade US stocks over here as well. If you know of any company you want to own some shares in Ghana, let's say Nestor Ghana. Let's see if Nestor Ghana is here. I'm not really sure if you can find that. So you can just go to Nestor Ghana. So Nestor Ghana. Okay, we don't have Nestor. So what you can do is you can just go to stocks and you drop the global to Ghana. So you see all the places you can own ownership. So all these are stocks you can see on the stock market. You have treasury bills, Ghana treasury bills, you can invest in that. So all these are things you can invest in. As I said, I'm not going to gatekeep. So all these, you can invest in all these companies, all these companies. There are a lot, a lot. MTN, Goldfields, Ghana, there are a lot. GT Bank, a whole lot of companies. So you just go there and you trade. So Miss uh Ms. Benita, if you asked the purpose of Blackstar, there are other apps. They also have IC securities. So you can also use IC World Security to trade. But this was so far, this is what I did, and they approved of me within the same day. So just I recommend this. All right. Any other question? If not, thank you so much for joining the live session. It has been very fruitful. And if you want other information on this, when you book the session, I'll also take you through how you can. I'll also take you through how you can also invest in Ghana. As I said, I'm not going to gatekeep. If I gatekeep, they don't pay me anything. If I let you know, they don't pay me anything. But I'm pretty sure God will bless me. If God don't bless me, I don't agree. So that is it. Any other question, guys? Any other question? Any other question? If not, God bless everybody who joined. I don't take it for granted, as I said. Uh, if there's no other question, God bless everybody who joined. I called him for assistance over. Okay, allow me to read just few things. Someone said, "Who is this?" Josh. This gentleman is selfless. I respect you, sir. I called him for assistance over the week, and he helped me. Thank you, but thank you, senior. So as I said, that's all I love to. I love to help. I love to offer tutorials, and that's what I do for fun. Thank you so much for joining. We'll see you at the other side of the world. Bye bye.